All right, thanks Dan, and thanks for having me aboard. Thanks also to the entire Winvesting team for taking the time to put this event together today. Thank you. I think it's pretty awesome. We can all get together and discover new things about trading. Today, I put together a special presentation, Smart Patterns, Trading Range Expansions, and How to Predict Them. When the market is opening, for example, the one thing that you know it's going to do is you're going to have a range each day. And so as the day progresses, you have a certain amount of opportunity each day. And because of that relationship, that becomes very measurable. And so we're going to talk today about how that works and how you can understand markets from the viewpoint of range expansion, because after all, that's really what we're trading for. Now, the charts that I'll be working with today will be intraday charts, but these principles work in any time frame and on any market. Some markets, of course, are better than others because they have more range expansion than others. Some markets trend more and some markets counter-trend more, and some markets move in different time intervals in different ways, and depending on the structure of the market, provides more or less opportunity. So the most common markets for some of the strategies I'm showing you today that would work really well would be crude oil, and some of the examples I'll show you will be on crude oil charts. We also do this very successfully in the E-mini S&Ps, works great on the Russell, gold probably particularly early in the day, and any number of other markets. And I've recently been assisting someone with some Forex and using some of these concepts in Forex as well. So it's pretty universal concepts. And then I'll funnel that down, and maybe if we have time, we'll explore some charts and things like that beyond just what I've prepared. So without further delay, what I always like to do is cover the disclaimer. I'm not probably going to state any performance today specifically. I'm always very cautious about stating what can be achieved with trading, because I've seen guys who come into trading with just a happy-go-lucky kind of a disposition and do really great with it, and some people struggle with internal things. And that's, Dan had mentioned a minute ago, I'm a board-certified hypnotherapist, and I work with a lot of traders in helping them with those kinds of issues, because a lot of times the only thing that stands between success in our trading is not really the tools that we're using necessarily, but it's just ourselves getting in our own way. And so I'm not going to spend a ton of time talking about that today, but for that reason, it's interesting observation that that you usually do well when you're not concerned with the money itself, and you're more focused on the process of trading. So this disclaimer is really about that. And the old saying, past performance is not necessarily indicative of future results. There's a risk of loss trading. And so it's really a good point to bring up that if you're trading, if you can do that with money that you have as risk capital, then you don't get caught up in thinking about or trading money. Because when you trade money, you often get caught in the trap of the herd, and you end up doing the opposite of what you really need to do. Markets have a magical way of trapping traders on the wrong side, and we're going to talk about that a little bit today also as we go forward. So how did I get here? Well, Dan had mentioned that I was biggest E-mini trader in the world. In fact, at one time we were 25% of the volume in the E-mini S&Ps, and And so I've had a wonderful opportunity to experience liquidity in markets in ways that most people don't really have the opportunity to do. So hopefully some of the, my insight in that can help you to be a better trader in what I share with you today. But I was fortunate enough when I began trading to have the same experience that most people have, that getting on the wrong side of the market. I call it the trapping cycle sometimes. The market traps you on the wrong side. And then you hold out trades and do things that aren't in your best interest. And so you have like an opportunity cost, which is a concept from economics. If you take like an economics course in college or something like that, to talk about opportunity cost, you get into a position and you hang on to it when the statistics and the odds are not in your favor. And then by holding that out, eventually it forces you out as the market makes a range expansion in the opposing direction. But in the beginning, I experienced that just like everybody else does. And then I actually spent 7 years after losing quite a bit of money. I spent 7 years developing my first trading system, and probably 10,000 hours easy. Malcolm Gladwell, the famous author, wrote a book about this. He said it takes 10,000 hours to get good at something, and of course that's supposing that you may or may not have some good instruction along the way, or someone to help you to kind of cut corners on that and reduce that process. But as traders, we're always learning because the market's always just a little bit different. It's always just a little bit different. And about 4 years ago or so, about 5 years ago, I was approached by a broker who asked me if I would help develop some tools for his clients. And so I did that. And that was an interesting project, and I learned a tremendous amount in the process. And that put me into the position of helping traders really face to face for the first time about 5 years ago or so. And then I started having some traders reach out to me and say, hey, could you start a trading room? And so I ended up starting a trading room, which put me into the position of being a teacher. And so my experience of being a teacher and teaching trading, and also having interests, I have a degree in experimental psychology, and in my youth I aspired to be a clinical psychologist, and one thing led to another. I used the research. I have a research degree and a lot of statistics and things like that, and so I approached things kind of statistically. But when I started the trading room and started doing these things, I found myself in the highly rewarding position of helping other traders. And I found that really fed my soul. And so I do that each day in a trading room. We've got a couple of trading rooms now. I'll tell you about a little bit later. So my mission in trading has not just been trading in recent years. I trade for my own account mostly now. I do some managed money. But my mission has been to help other traders be able to do what I've been able to do over the years, because I've been able to have a very nice lifestyle as a trader and not have to have a job. It's kind of funny not having a job. I had mentioned I have a degree in experimental psychology. And so that's really, that degree was around statistics and setting up experiments that are repeatable. And so I use those same techniques that I learned in my education to develop trading systems. My company is Axiom Research and Trading. I'm in Carlsbad, California. I just work out of my home, just keep things simple. I'm a one-man operation. And as mentioned, I've been doing this now for about 27 years, and I really enjoy it. It's in my blood. And so I talked a little bit about psychology, and so that's how I got here. And so as we go forward, I'll try and bring some of those experiences of all that to bear in what we do. One thing that I like to start a session with is what I call the learning state. The learning state's a really interesting thing. puts you in just a matter of about 15 seconds or so, it puts you into a mindset where you can be really, really focused. So you see that dot on your screen there. If you'll just look at that and just kind of gaze at it. And as you gaze at it, you'll notice, this is very interesting, you'll notice that as you gaze at it more and more, just kind of going into that stare, that if you bring your right hand up on the right side of your face and maybe twiddle your pinky a little bit, you'll notice that you can see, while you're still looking at the dot, you can see 180 degrees out to the right. Most people can, everybody can't, but with a little practice you usually can. And then if you bring your left hand up and twiddle your pinky over there, you'll notice that you can see 360 degrees while you're still staring at the dot. And I call that the learning state. We've learned to teach that to kids. They teach them to do that before their teacher starts lecturing. And it puts them into a mindset where they can easily recall the information later without having to think about it or be super conscious about it. And so that's a nice thing. We found we've got 20 years of data on it. Teaching that to a kid to do in a classroom setting, for example, will increase their grade about 1 to 1.5 grades. So if they're a C student, it'll bump them up to a B to a B plus just by using that strategy and doing that. But it also uses for trading because it puts you into a mindset where you're open-minded and you're present in the moment. So remember the learning state. That's nice. And you can just put a dot on your wall someplace in your office. It's a little bit better if it's slightly above your natural gaze so that you're looking up just a little bit at it. But the learning state's a really wonderful state. I'm currently learning Tai Chi, and yesterday it taught us an exercise where you're staring at a point on the wall, and I was like, oh, well, I know that one. That's a learning state, you know. And so anyways, hopefully that can help you to be present while you're trading and be in a balanced state of mind while you're trading. So just wanted to share that with you. So bring your gaze back down. So what are we going to cover today? Well, the big picture of what we're going to cover today is identifying a bigger trend and identifying cycle expansions before they occur. This is one of the very first trading systems that I ever learned to develop was cycle expansions before they occur. So I'm going to show you how to do that. And then we're going to learn a bit about momentum analysis, and we're going to learn some high and low patterns that hold at the 80% level. That's a statistic. I don't like to use the word statistics. It scares a lot of people, but it's just simple stuff. And I'll show you how we do some simple statistics, just exactly how simple they are, and apply them to markets in a powerful way. We'll talk a little bit about daily ranges and how you can predict them. And I'll give you some tips on that in some different markets if I remember. And trend systems that work at the 80% level and help to manage risk also at the same time. So you get a trend system that the average bars are relatively small range, then you can manage risk with them, particularly if you're keeping the bigger picture in mind with those cycle expansions and the bigger trends. So that kind of brings things all together. And then finally, I'm going to cover hybrid trading system strategies and how that helps you to manage your trade and to get into trades with a little lower risk than trading, for example, breakouts or counter trend trading. So we'll cover how you do that too. So first off, the nature of large-scale trend patterns and positioning yourself for it. One of the single biggest mistakes intraday traders make is trading based on immediate price structure alone. I probably shouldn't have just said intraday traders. I probably should have pointed out that that applies in all time frames, but I do most of my trading intraday, so that's what I was thinking when I wrote it. So traders will trade based on immediate price structure, just exactly what they're seeing on their chart. And very often trading inside of structures that are relatively small. In 27 years of developing trading systems, I've never seen a trading system be successful that was based solely on immediate price structure. And so that's why I'd mentioned before, really what you want to do is get that bigger picture in mind. So trading based on the bigger picture of what's happening can help you to trade for range expansion and manage risk with respect for that larger picture and get caught in the larger trade that skews things in your favor. If you think about it, when you're trading and you have some statistical understanding or some knowledge of what that bigger picture is doing, then that can help you to have conviction about what it is that you're doing. Because you're not just down there in the minutia of what's happening, you understand how that relates to the bigger picture of what's going on. And when you do that, it gives you the ability to take trades with some level of conviction. What a lot of traders get into is getting a trade, and very often the market's in a consolidation, and they'll get into a trade and they'll, as it goes towards the upper end of the consolidation area, they'll end up buying up in there, and then the market comes back down into range going against them, and then as they get to the lower part of it, they sell, and then the market comes back up into range, and it traps inside of that smaller structure. But if you have the bigger picture in mind, it can help you to position yourself accordingly based on what's happening. And there are certain times, for example, that those things will happen in different situations, and we're going to cover some of that too. So let's take a look at some larger factors in exploiting a market's bigger range expansion. This is a daily chart of crude oil, and I pasted this in here a couple of days ago while I was doing the presentation. But what I do, and here I'll just, I don't know if tell me if the software, I can just show you the real chart here, but basically what I do is I ask myself, what level is the market hitting 85% of the time? What level is the market hitting 85% of the time? I like that 85% level because it tells me that it's pretty reliable in general. So I think there are something like 32 days on this chart. And what I simply do is I just put a range indicator on the chart, and I ask myself, what level will I hit 85% of days? Will I hit that level? In crude oil right now, for example, we're hitting 65 ticks of range 85% of the time. 65 ticks of range. So that's about $650 per contract of overall opportunity that's in the market. You might not capture all of that. I say if you capture about half of that as a trader, you're doing a pretty good job. Weekly ranges, for example, reference to the right kind of point in this particular market are about 200 ticks to 250 ticks every week. And so if you know what that bigger picture is, for example, it's a very powerful thing. Another thing that we know, just as a side note, is that in this particular market and in other markets as well, when you take out a prior day's low, for example, there's about a 70% probability that it's going to continue. And so you come down, you take out this low, and the market comes down, and then it trades inside, and then you take out the low, and it continues down. Took out the high here, so the trapping, and then it took out the low and continued here. And then yesterday it took out the low, and we just had this massive range expansion today, 213 ticks. So about $2,100 per contract of opportunity that occurred. And you knew that that was likely to occur at about the 70% level when you took out that low right there. But we knew that there was an 85% probability that we were going 65 ticks today or on any other day in this particular market. And so by knowing what that bigger picture is, at the open each day, I know there's an 85% probability that I've got about $650 of total opportunity. As the market moves away from that open in one direction or another, that opportunity diminishes. And so it's important to take advantage of that opportunity in the right kind of timing. And then I'm going to show you some other things in a few minutes that can help you to do that even more. But you know, you got 65, 85% of the time. This particular market, used to be about 85 ticks. In fact, for about a year and a half, it was 85 ticks every day at the 90% level or so. And right now it's been about 65. There's been some things going on with OPEC that have got it clamped down a little bit more. And then you get these big range expansion days like this one. I think that was 267 that day, and today was 213. So how do you do this? Well, I just get a horizontal line tool and I just start eyeballing it. No big rocket science here. I just start eyeballing what line hits almost all of them. You know, miss a couple here and there, and then you count them out. I like to do a minimum of 20 or 30 of them and just look at what kind of ranges it's going to give me. And then you just find that level where it's about 85%. And you can usually do that in just a couple of minutes. And so you've done your first market range expansion statistic, and then you know that when you're trading. And you can, of course, do that on weekly or larger scale bars as well. So an amazing pattern, a large scale trend, is referencing the week's range to key reports. I first was introduced to this concept by a researcher who worked for a lot of really high-level traders. And referencing to reports of the week is a very interesting thing, because most people think of a week from Monday through Friday. But I don't think of a week from Monday through Friday as much as I think of a week from report to report. And so in this particular market that we're looking at, crude oil, for example, there's an inventory report on Wednesdays usually. Sometimes it's on Thursday. And we tend to go about 200 to 250 ticks in this particular market from report day to report day. That range is typically greater than 200 to 250 ticks. So I've got 68 ticks at 85% level, and then I've got 200 to 250 ticks on a larger level. So what will happen is the market will create these fake outs in that direction, and then on top, I showed you a few minutes ago, if you take out a low, it's 70% to continue. So is this a trading system? No, it's not a trading system at all. You could turn it into a trading system, but what I like to do, and let me just share this with you for a moment, the very, very best trading systems are made out of collections of things that you know. And so, I know that we're going to go 65 ticks at an 85% level. I know if I'm going to take out the prior day's low, I'm going to continue the next day at the 70% level. I know that I'm going to go 200 to 250 ticks off of the report, this particular report from Wednesdays with a high probability. And so I just have all those things kind of stacked up, just this big picture stuff. And what that does is it tells me what side to trade from, And so you can then go in and use some of these other techniques that I'm going to show you in the next few minutes. But it's a method for aligning yourself with the bigger picture of what's happening. Because in actuality, what's really happening in these markets is people with a whole heck of a lot more money than you and I are really governing what's happening with it. And so we need to trade kind of, beat to their drum. And so we want to align ourselves with those groups of traders in a way that that's to our advantage. Because after all, when you fire a trade, the thing that carries the trade to success is other people. You've already done your thing. You've clicked, you've entered. You have a risk strategy, a risk management strategy going on, some stop loss and things like that. But it's what other people are going to do following your entry that's going to make the trade successful. And so I need to be, or I prefer to be thinking in terms of what those larger scale participants are doing. and the way they're going to drive the market to my advantage. So I'm just going on for a ride. It's kind of like surfing. You know, once you're on the wave, that wave is going to carry you, and but you're not in control of the wave. It's a much more powerful thing than you are, really. So in the remainder of the webinar, I'm going to show you some patterns for hybrid trading strategies and honing in on better risk-reward scenarios within this larger framework that we're talking about. When the cycle begins to expand, you'll likely see it now before other traders can. I have some fun little sayings that I put on the bottom of these slides for you. So let's take a look at what that's all about. The nature of trend and how to predict it. One of the biggest secrets, and I alluded to it a few minutes ago, that I had learned fairly early on in trading, it's always been true, as far back as I've ever tested, and it continues to be true, is that cycle expansion happens before range expansion. Cycle expansion happens before range expansion. Interesting concept. And because cycle expansion tends to occur before range expansion, you can use that to make better predictions about the trend and trend continuation. So this can sometimes be seen by looking at charts, can be if you know what to look for, but more often than not, you need to have a cycle analysis tool to help you to see where that cycle expansion is happening, and so you can align with the trend for that range expansion that follows the cycle expansion. So to identify these areas on charts, we use an indicator called Smart Momentum. That's from my company, Indicator Smart, and I'm going to show you how that works. You can use it both as a divergence tool and as a trend indicator. So cycle analysis properly done can be a very significant edge in your trading, and we're going to take a look at a chart that shows this. The basic pattern that I call this, and years ago I had a programmer that developed this tool. His name is Bill Brower. He's a TradeStation programmer, and he had developed this tool called the Diverge Engine. And he had coded this to identify divergences, but the types of divergences that he was coding were the kind that you'd read about in a book. And there's more about these kinds of divergences. Some people call them hidden divergences, but we were doing this 20 years ago when he developed that tool. And I said, hey, Bill, could you code that for me? Could you add a thing for that to show what some people call a reverse divergence or a hidden divergence? But at the time that I asked Bill to code that for me, I called it a type 2 because the first one, I think he was calling it a type 1. And so I said, hey, Bill, can you code that? And we just called it a type 2 divergent, and he built it into that tool years and years ago. But basically, what you have with this pattern is if you get a lower high, the market's going down like this, A, B, C, D, just going down like that. And you come back and you touch into that first level, and then you look over and you see that this is lower, this part's a little lower, and you see that this is higher than this is over here. That's telling you that the cycle is expanding and that more trend continuation is likely. That's the same thing over here. So the market's coming down like this, the market comes up like this, and while the market's going lower, the smart momentum is going higher. Now, how is it that the smart momentum does this? Well, what the smart momentum is doing is it's making calculations to predict the cycle length, the cycle expansion or contraction. And it's coded in such a way to identify for you when that cycle is expanding. So when the market's going lower and the smart momentum is going up, you ask yourself the question, why is the smart momentum going up? The market's going down, right? Well, then you get the type 2 divergent pattern right here, and you get a continuation of the trend. Same thing happens over here. And here you go A, B, C, D up, and then you come back into here and you get the type 2 from this point to this point. You expect the market to go up there, and it ends up trapping a bit and then headed lower later after this type 2 right here. So it's a double top right here, and the market comes up like that, and then the market continues the original trend. It's very rare that a market just goes in one leg, just one leg, just as a side note for you. So you look at the chart, you know, if I call them A, B, C, D, A, B, C, D, okay. Going up, A, B, C, D, okay. Going down, A, B, C, trade inside, D. A, B, C, D. Very rare that you just get one leg that takes out another one that's not cycling according to this, this kind of a patterning. That's another really good thing to know. But the type 2, if you just learn to go, well, A, B, C, D, you can just get that patterning into your consciousness. When you're looking at charts, you can start seeing all kinds of stuff, all kinds of stuff. But the type 2 is a wonderful, wonderful tool that tells you when the market's about to expand. If I'd show you that on a chart from today, it'd just be screaming at you because the market really took off. But on this one, I showed you a chart that's a little bit more in consolidation because markets like this a little higher percentage of the time than it was like today, where we had a pretty substantial range expansion today. So now some times of day are better to trade than others. There's a sweet time. In crude oil, I call it sweet time. I actually call it sweet time in other markets too. I think, for example, just off the top of my head, if you take a market like the Russell, for example, we have another tool we use. I'm not covering it today. It's called the 3-period probability walk analysis. And what that'll show you is that the maximum range expansion happening, say, in the ES or TF or crude oil or whatever, happens relatively early in the day. In crude oil, that time occurs each day between 10 a.m. and 11:20 a.m. And there's actually several interesting ways that you can use this this knowledge. Let me cover the rest of this slide, and then I'll cover some of those points. So this is kind of like a seasonal tendency. You hear, oh, well, crude oil goes up in the summertime or gasoline goes up in the summertime, crude oil goes up in the summertime as people go on vacation and start burning a lot of gasoline. That drives prices up a little bit. And so there's a seasonal tendency for that to occur. Well, similarly, on the intraday, there are seasonal tendencies. And it's really advantageous to position yourself with this tendency for the best risk reward. So, in terms of the bigger picture we're talking about, okay, well, we've got, range expansion for the week, and we've got, cycle expansion, we've got all these other things, but what's the best time to really hop on it? What does it really do? So I have a little table here for you. And I've broken down the day into 30-minute periods. You're just looking at the day in 30-minute intervals. And the A period's the first 30 minutes, B is the second 30 minutes, etc. And this tells you how many percent of the day's range you do by that period. It's cumulative. You see, by the time you get to the end of the day, K period, you've done 100% of the range. So the interesting thing is, there's 5 periods here, and there's 5 periods over here, and F is in the middle. And so F period, by F period each day, you've used 85% of the day's range, usually. So 85% of the day's range is typically expired by F period, and it's therefore best to trade before that time, or before about 11:20 or 11:30 a.m. Eastern time. And that's true in just about any market. In fact, if you get strong range expansions early in the day, that's highly indicative of range expansion days, usually. And so that's another thing too. If you get a strong range expansion early in the day, sometimes it's in your best interest to try and keep your trades on if you can with that bigger trend. Certainly was the case today in crude oil, for example. So the first half of the day gets 85% of the action and the remainder only 15%. So 85, 100 minus 85. So this next 2.5 hours only gets 15% of the action. A few minutes ago I was talking about opportunity cost in economics. It's like, okay, I can spend 2.5 hours to get 15% of what's available, or I can spend 2.5 hours to get 85%. Which do you choose? Well, let me, okay, on the left hand, I've got, 85% of the action, and on the right hand, I got 15%. Okay, right. So what are a few observations one might glean from this? Well, trade during the sweet time in that early part of the day. Trade less after sweet time in general. Expect trades after sweet time to take longer to develop. You got to be way more patient. Way more patient. And because it's more consolidative later in the day, you got to be more patient. And failure to develop range early on can be indicative of consolidation. So if the market doesn't meet reasonable goals, it can often be indicative that you're just not moving today. So you want to use caution. And that's particularly true if you're trading inside a range. So if I'm trading in F period and I've only gotten, if I'm expecting 65 ticks at the 85% level, like we talked about earlier, but I've only got 30 ticks right here, I should have 45, right? And so if it's doing that, and as I look back through the periods, the price action's still inside those prior periods, then that's what I mean, especially if you're in range right there. And then what you want to do, or what's better to do, is to wait for it to break, if it's going to break, because sometimes it'll break later in the day, but more often than not it doesn't. If you've got a day like today where there's a significant report, of course you have to adjust this. You have to adjust this. So let's take a look at a tool that'll help you to see where traders get themselves on the wrong side of the market. I call this the trapping cycle. Trapping cycle. You get on the wrong side, and in a place where the market's consolidating, where you're inside that range of the last periods or something like that, and we can use this tool to help keep ourselves on the right side of it. So I developed this tool called the Trap Trader Oscillator, and what that does is it analyzes the order flow. A lot of order flow indicators are really problematic for a trader because they, things like a ladder or something like that, they have all these numbers all over the place on the chart. There's hundreds of numbers all over your chart. And you're like, I don't know what to do with all that. And it puts you in a state of indecision, particularly if you don't know what that bigger picture is. And the last thing you want to be when you're trading is to be in a state of indecision. And you certainly don't want to be in a state of indecision and not be consciously aware of it. Sometimes we're waiting when trading, and that's okay. But you should know both sides, right? You want to know both sides of what you're doing. It's like, okay, there's this much to my advantage going this way, but there's this much to my disadvantage going the other way. But what this Trap Trader Oscillator does is it puts it all together just in a simple graphical picture, and makes it easy for you to see that and not have to see 100 things on your chart. And so, but what it's doing is it's analyzing order flow over recent price action in a way that's just easy to see. So when you look at the market in conjunction with price action patterns, you see that traders get caught on the wrong side of the market. And as the market moves against them, what happens is those traders are usually weak hands. Those are the guys that are in a state of indecision. They don't know what the bigger picture is, or this sort of thing. And so when the market starts going against them, they're going to place a bunch of stop orders, usually just right outside the range, right outside the range. And so that'll help to propel the price in your direction. So it helps to line things up for you. If you get on the right side of the trapping cycle and you get those traders stop orders on the other side, it helps to carry your trade away from your entry in a direction that's advantageous to you. Then from there you can often get into a free trade situation or where your risk is low, and then you can get trades that run away from you. Now it's really important in trading to get into trades that run away from you. I know that just sounds like sounds too basic, but what happens with these weak hands, as I called them a couple of minutes ago, is that they never get, because they're unsure of what they're doing, they never get caught in a big trade, because as soon as they get in a profit, they'll go, oh my goodness, I got 5 ticks of profit. You take it off, right? And then it runs away and turns into a 100-tick trade. You don't want to be that person either. And so this kind of context that we're talking about here makes it possible for you to get caught in runaway trades. A lot of times, a guy just today, he caught a 160-tick trade today. A guy reported to me in one of our trading rooms, and he's able to do that because of this big picture kind of stuff. Well, when you book a $1,600 trade, it makes it kind of hard to lose that back. He's trading one lots, and so it's actually, in the grand scheme of things, those big trades that make your month. And so it's real important to get caught in those bigger trades, which is really what this whole webinar is about, is getting caught in those range expansions at whatever time frame or market that you choose to do it in. So I've got about, actually I have 10 on here. This is 10 or more, but there's about 13 of them now, because what happens is we got 100+ traders giving us feedback on this stuff every day, and so we've developed more patterns. But there's about a dozen of them or so that we use that are real reliable and helps keep you on the right side of that trapping cycle a good percentage of the time. So we're going to look at a chart in a minute. I'm going to use the same chart we were looking at earlier, but I'm going to introduce the trap trader oscillator to that chart. We're going to look at those same spots and see what happens right there in those areas. And then aligning yourself for the expanding ranges, of course, is what you want to do with it. But this gives us a comprehensive approach, because so what do we have? Well, we've got the smart momentum telling us that the cycle's expanding. We know what the bigger likely direction is, or at least how much there is. And then the trap trader oscillator tells us what's happening with the order flow. So it's comprehensive because you're looking both at what the price action is doing, and then you're aligning it also with the traders being on the wrong side and helping your trade in that direction as well. And so it's kind of covering what's happening in 2 different dimensions, in terms of the price action itself, and then also in terms of what's happening with the orders themselves. And so let's take a look. I think I've got a chart here on the next one for us to look at. Oh, not quite yet. So what I have here, hidden patterns and order flow. Market alternates all day. Yeah, so the market just does this all day long. In fact, it's almost like it's the market's purpose to humiliate traders that don't know what they're doing. And so trap trader oscillator. So we're going to look at the TTO pump. I call it the TTO pump. TTOP, we abbreviate it, TTO pump. And that's where you take out a couple of prior dots on the indicator. I'm going to show you that in just a minute. It doesn't take a whole heck of a lot of practice to learn to anticipate this. So these indicators work in a graphical way to show you what's happening with the order flow in a simple way, and not showing you more things. And as I got older as a trader, I had to realize that the conservation of my mental energy was a very important part of my trading success. Because you can fatigue yourself. In fact, surveys done with CEOs of large corporations ask the CEOs, how much of your day do you actually spend doing things that actually promote or cause growth within the company? And the average came back 1.5 hours. So the average person really can't be effective for a whole heck of a lot more than 1.5 hours. When you're younger, I think you can do it a little bit more. As you get older, a little bit less. But you have to manage the way you're expending your energy, because what do we all do when we get tired? You start getting a little grouchy, or start pouting like a baby, right? You don't want to be doing that while you're trading. You want to maintain an irrational state, use your learning state, and so let's take a look at the chart here. So this is the same chart that we looked at earlier with the smart momentum. I kind of scrunched that down. We looked at the expanding cycles there. And the TTO pump is just simply where you've taken out two prior dots. We've taken out two prior dots, or where you go through that purple dot dash line right there. And so that'll show you, this is just one of about a dozen patterns mentioned a few minutes ago. But what we have right here is the market's coming down, and we come up and we take out these prior dots right here, and then we expect the market to head lower, along with the type 2, the expanding cycle, and trap traders, right? Similarly, you come down into this low, and you come up. Now, I don't typically trade in the counter. I'll trade with the trend. So I'll wait to take out a couple dots again, or to come above the purple line, and then that also confirms for me that we're going to go lower there. Again, you get a double bottom over here. You could choose to trade that or not. I tend to try to trade with the trend and the direction that things are going. And then we get another TTO pump over in here. So, but this is, I call this the trapping cycle. The market's going to come down, market's going to come up, market's going to come down, market's going to come up like this. And that's one basic pattern on the trap trader oscillator. And there are a number of other ones that we won't have time to cover today. Taking advantage of high probability trend momentum patterns. Trend momentum patterns. This chart right here is one of my favorite charts. This is just a wonderful, wonderful chart. This is using a trend system, or it's using it's called the Smart Trend System, but this is an advanced version of it called the Smart Breakpoint System. And what this does is it identifies where the order flow itself is actually leading out ahead of the price action. The interesting thing about this is that you can actually trade it on that alone without even looking at the price. You just look at where the order flow is leading out, because order flow itself tends to lead price action. Let's look at the slide and see what we have for this. So the Smart Trend System combines high probability continuation statistics with order flow lead out patterns to help align things in your favor. Now, the way I came up with this thing was there was a guy, I forget his name, and I apologize to him for doing this, but Jack Schwager had written about him in one of the Market Wizards books. And basically what he was doing, these guys are just making a fortune. You can't really do this anymore. But they were making a fortune trading trends with, basically coded it said if the close is greater than the open, or the close is greater than yesterday's close, then you buy. And if the close is less than yesterday's close, or whatever interval it is, then you sell. And This is called trend persistency. So what I did was I took this basic kind of concept. Now, the problem is these days is that you get a lot more noise inside the bars. The markets are much more liquid these days, and you get a lot of noise inside the bars. So you need some kind of micro level filtering to help with that persistency calculation. You can still get the persistency out of it, but you have to do it in a way that that doesn't, it filters out the noise, and that's what the trend system is really all about. But I test these out for persistency at above the 80% level, and that's been true just forever. And so it's a really good little trend system. But then when you add the lead out patterns to it, that's called the smart breakpoint system, and that's a chart we were just looking at. So what is a lead out? A lead out is when order flow on the trap trader oscillator is leading price. It's leading price. So for example, the trap trader oscillator itself is going higher while price is in the same place. And it tells you that the market is accumulating buyers, for example, before it goes higher, a little bit before. And so order flow tends to lead price action, There's a little bit of a nice edge there. And on like that 1,000 UT chart that we just looked at a few minutes ago, that chart can carry you in trades that'll just persist for, you know, a whole day sometimes. Order flow tends to lead price action. Order flow tends to lead price action. Why did I put that on there 3 times? Why did I put that on there 3 times? Oh, because I want you to imprint that. Order flow leads price action. So don't forget that one. When order flow is leading out, make sure you're on the right side or get out. You don't want to get on the wrong side of order flow leading out, because it's like a freight train. It's like a freight train. And so that's good to know. It's even better to know when it's aligned with the bigger picture of what's happening, right? This one's a 3,000 volume chart. What I really like about this on the 3,000 volume chart in crude, I'll use a 12,000 volume chart in ES. I'll use about a 3,000 in the Russell. What I really like about this chart is it can help me with entry-level management because the bars here, you can see on this, I have a range indicator on here. We talked about using range on the daily bars, but what I use the range for on this one is to tell me how big these bars are. The average bar is, actually the median bar is only 7 ticks. So it helps you to manage your trade within a very tight range, And when the market, when the background turns green or when it turns red, it tends to persist. Yeah, you get trapped some places, but the average bar is 7 ticks or so, and so when you get necked, it's relatively small usually. And then you get persistency. Well, another thing I like about a trend chart like this is that you can see where it nicks you. You can easily see your risk reward just by looking at the chart if you train your eye a little bit to do that. Let's look at the next one. So what are some of the benefits of using this kind of a system? Well, average bar is only about 8 ticks. I think it said 7 on there, about 8. So when you're using the chart for confirmation, used in conjunction with the main chart, that's the one that we looked at a little bit earlier, it gives you really good entry level and money management capabilities. So it's getting down to the micro level. We started with the whole day's range. We started with a week's range. We started with what time of the day is better. And now we started with range expansion. And now we're funneling right down to the execution level. We're looking at everything today in our discussion has been from a top-down kind of way of looking at things. So using this method on a higher level order flow related bars like that, bigger chart that we looked at, can get you caught in pretty big trades. And if you use a multiple contract strategy where you peel off a certain amount, say you trade a 2-lot or something and you take half of it off, it puts you into a position to lock in a free trade kind of a situation. That bigger chart, I use that ultimate tick bar from Indicator Smart. I'll tell you more about those things in a few minutes. So the trend system's easy because it just reduces everything to a color change. It's just red or green. The trend charts are often tend to move away. You tend to move away. So it makes the risk lower. As the probability for a continuation bar is about 80+%. And so it tends to move away. And so you're getting momentum at your entry level. And that's especially true during like sweet time, for example. So you are using a lead out in the order flow as a confirmation to what's happening. And you get follow through with that because order flow tends to lead price action. And so if you've got the components for it, the template for doing that's free on the Indicator Smart website. And there's a link I'm going to give you to the page that you can get that if you have the components to do that. So I also promised on our list of things that we're going to cover today about a hybrid trading strategy. If you'd ever read the book Linda Raschke wrote, Street Smart, she had one in there called The Holy Grail. That's a form of a hybrid trading strategy, but the way we do it's a little higher tech than that. But so there's two basic methods of trading. There's trend trading and there's counter trend trading. So you can go with the larger trend, and things stack, based on the discussion we've had today, things stack in your favor for trading with that larger trend, right? Because it's going to go 200 ticks, 250 ticks almost every week, this kind of thing. And then there's counter trend trading. And counter trend trading is fun, but it often doesn't result in large range expansions. So each one has a certain profile. So if somebody shows me a trading system summary, and I see that the win percentage is like 50, 60%, I know that that's a trend system. And then often is 50, 60%, and the average winning trade is larger than the average losing trade. That's a trend system. If they show me the system performance summary and it's 80% winners, and the average winner is smaller than the average loser, then I know that's a counter trend system. Just by looking at those two numbers, I know that right out the gate, exactly what that system's doing. And so these might be suitable for different trader personalities. In the grand scheme of things, you can trade, we're going to talk about the hybrid, we're going to talk about how you can trade counter trend within the trend and line things up in your favor for that. So a hybrid trading strategy makes it possible to take advantage of both methods leading to an edge in your trading. And basically what you're going to do there is the market's going up, you're going to buy the dips as the cycle's expanding, right? Or if it's going down, you're going to sell the rallies. Sometimes we say SAR, sell all rallies. Sell all rallies. So it makes it possible to align yourself for a higher win percentage and for a larger average win, average loss ratio that I talked about a minute ago, right? Those are key statistics to success in trading. You want to get caught in those trades that are much bigger than your losers are, right? The intent of a hybrid approach, big winners, small losers at a high percentage. So how do you do that? Well, a breakout system would sell the break of that low there. And then of course it usually comes back up into range with pretty high probability, at least 68% that you're going to come back up into range when you break that low. 68%. This is just a general rule of thumb. So like the turtles method, some of you may be familiar with the turtles method, you're going to go into a drawdown about 68% of the time when you fire that trade. So what you do is you wait for it to come back in while the cycle's expanding, and then you trade with the trend. The cycle is expanding, comes back up into range, and then you get to sell a little bit of a discount. Get to sell a little bit of a discount. Get to sell a little bit of a discount. And it gives you some margin for managing your risk a little bit better, as opposed to trading a breakout or trading in counter trend, for example. I don't think we're gonna, I'm right at time here, and so I had a note here, we'll look at some more charts, but I don't think we'll have time for that today. So I want to cover a couple of things. I have put together some packages for you that's a special for today's webinar. And I put those on a web page for you at Indicator Smart. And so we don't have to spend a lot of time covering this. And if you have questions, you can always email me. But if you go to indicatorsmart.com/MarketFest, you can see all these options on here. Just pulling that up. Let me pull this off of here because sometimes the software doesn't like that. So here's a summary of tools that are related to what we've talked about today. Summary of tools that are related to what we've talked about today. And I put a $100 coupon in here. A lot of these things are, well, actually all these things are at the lowest price we've ever offered them, but I have a coupon for you, MarketFest coupon code. It takes another $100 off, and that's good until the 14th. But all these are links here. Now, what's cool about these are you can go into those and you can watch the video that shows you a little bit more about how each of those things work. So I put together some packages that aren't normally available for this exact webinar and for this special, and put together some pricing there. But if you decide you want to do any of those, be sure to use the coupon code. And even if you aren't sure that you would want to look deeper into some of these techniques and ways of trading, go watch the videos on each of those. Now, it doesn't say it on here, but if you get most of these packages will include a free month. If you spend more than $997, will include a free month in the oil trading room or the stock index trading room. It's your choice. A stock index trading room is focused around the ES, and the oil trading room is focused around oil. A lot of the screenshots I used today were for crude oil because I run the oil trading room, and so that's the charts that I usually have available. Steve runs the stock index trading room. Steve started with me pretty much from scratch and learned all these methods. He's an absolutely incredible teacher, and he has just a magical way of reducing things to the highly understandable. He's taken all these techniques and he's really mastered them. But go to that page, like I said, indicatorsmart.com/MarketFest. The coupon code's there for you. You can join our mailing list over there, or you can contact us if you need to. If you have questions specifically about the stock index trading room, I'll refer you to Steve. But you can contact me initially on that one, and I'll get you over to that. Let me see what other slides that I have here for you. Oh, so just some benefits of the trading room. So learn price action patterns that become part of your consciousness and empower you as a trader. Learn advanced trap trader oscillator patterns. Like I said, there's about a dozen of them. Benefit from a room with many world-class traders. We got incredible traders in our rooms. In fact, I learn as much or more from the traders than they learn from me, probably. And a lot of guys sharing their insights there. Learn secrets of trends and range expansion. Benefit from the trading system there. And just thousands of hours of member and user refinement. benefit from special content geared around personal development and personal growth. You might have noticed today a lot of what I talk about is just what exactly kind of a mindset do you get into while you're trading. And the rooms are often covering things that help in those areas. Just trader psychology kind of stuff, right? Discover things about markets you can learn nowhere else. Discover things in a way that makes you independent and at cause in your life. I cannot stress that. I cannot stress that more. Independent and at cause in your life. So empowering yourself. That goes way beyond trading and goes into every area of your life. This is one of the most rewarding things about the trading rooms is it transforms you in a way that goes way beyond trading. Learn key elements and concepts in trading system design. You've heard me talk about some things about trading system design. I've been designing systems for 27 years and have a lot to offer in that way. How to approach the market from a higher level so you can see, hear, and feel what the lower levels are doing. What are other traders thinking when you're putting on a trade? What are other groups of traders thinking when you're putting on a trade? Do all that in an environment that's supportive of high levels of growth and development, applicable to any market. I have a reviews page on the trading room, and Steve, the stock index trading room hasn't been around as long, but the reviews, I just did a little screenshot here of some of the recent reviews. These are unsolicited. I don't ask traders to send in comments on them, and I certainly don't post all of them that occur, but you might enjoy that also. So that's what I have for you today. Thank you, thank you. For more information, as I said, indicatorsmart.com/MarketFest. And there's also a link there to contact us if you need to. Now I have a little bit, I got about, I think Dan told me I have until 1:30. Dan, if we're getting too close to where you need to roll over to the next webinar, just let me know. But let me take a look at some of these questions and see if I can get those answered for you guys. I'm going to do them backwards. Hey, Reg. Well, I mean, ultimately, let me just go here and take this off of here. You know, this smart breakpoint system is just awesome. You know, depending on the budget, I think that's a real good way to get started. Ideally, you know, if you get these, I think there's only one of these that you won't get a month in the trading room. But if you, and mostly I think the smart breakpoint system we're using in the oil room, so that might be a little bit more suitable for you. But the whole enchilada, the whole trading system would be, you know, if it's within the budget for you, I'd suggest doing that. Now the cool thing about the way I work with this is I'm not really like a you know, you can probably tell I'm not really like a marketer guy, but basically whatever you get from me at some point or another, you got the whole system. I just apply it to the overall system price. And so, you know, you can, you know, if you get the smart trend system or something, that pricing is applicable to you know, if you get something later on, eventually you get the whole system. In fact, I think it's one of the biggest compliments that I ever received, that guys get these things based on they've seen it works, and so or they, you know, might get it, you know, they might start with something like the smart breakpoint system, and within a short time they get the whole thing, and it's a very high compliment to me that and it's a method of feedback that I have for knowing that people are being successful. And then you know, the rooms were always the rooms are always there for advanced learning. We're always developing new concepts and things in the room. So let me take a look. Yeah, hey Brian, just go to that page and send me an email, and I'll make sure that you have updated template for that smart breakpoints. But I think you might, if you've got those components, we can get you rolling on that. Let me see here, see what we got. Yeah, not a super lot of questions. Oh, Steve is asking the charting platform. So we showed a lot of custom bars today, custom bars. And the only trading platform that can really do that for us is NinjaTrader. NinjaTrader. And you can actually get NinjaTrader for free. You can go to the partners page on our website and download it for free. You can get a trial on it for free. So. Yeah. Oh, Sally asked if the indicator plots the arrows on the chart. No, it doesn't, Sally. I've drawn those arrows on there to point out where those things are. So we start the learning with the basic ABCD pattern, and then, but the actual trigger itself, it's the color change on the background. Like for example, this chart right here, you get the color change, and then you get the color change, you get the color change, you get the color change, right? And so that's the way the trigger actually happens. But you may, on the price action chart itself, you'll probably get a little bit more alternation than this. And so, you go into the trend chart or whatever. I find this chart itself to be entirely tradable. This would be the smart breakpoint system on an ultimate tick bar. And you can put a package together for that. So, all right, guys, that's what I've got. Yeah, Vlad, it's the order flow is a tick at the tick level. Yeah. So, all right, guys, that's what I got for you. Again, I would like to thank you, Dan, and I'd like to thank the whole team at Winvesting for having me today. And it's a pleasure, and thanks for including me. Let me put that. I lost my presentation. Let me put that back up so we're not just looking at a screen. Again, thank you guys for having me. And again, indicatorsmart.com/MarketFest will give you some more information and some links to get what you need. So, okay, guys.
All right, Rob, thank you very much.
Somebody had said something about yeah, Dan, you should have what you need for that. Send me an email and I'll make sure you got the, because there's an updated code for the color bars.
Okay.
And then you should be able to have all that. But just go to that second link, the breakpoint system, and you should be good to go, my friend. Yeah. Good to
Rob,
see
when
you.
you said,
All right, guys, thank you.
Rob, can you hear me?
I'll hand
I don't
it
know
back
if Rob
over to
can hear
Dan.
me. Said he...
Oh, there you go. Yeah,
Oh, okay.
Thank you.
When you said that for Dan to send you an email, where would he send you an email at?
Oh, there's a contact us on that, indicatorsmart.com/MarketFest, but let me, and that would be a form. So here, I'll paste that in for everybody. You do it right there. I think, or tell me if can everybody see that, Dan, or?
Yes. Oh, no, I'm sorry.
Okay.
That just went to panelists, but I'll put that in for everybody.
Okay, yeah, thanks. I see send to all.
Whoops. I don't know what happened there. Hold on a second. Try one more time. There we go. All right.
Yeah.
Everyone should be able to see.
So either use that link, guys, or go to indicatorsmart.com/MarketFest, and should have everything there that kind of summarizes the things that we talked about today for you too. So, okay.